Today, we're diving into the world of trading and discussing the essential steps you need to take to get started. Whether you're interested in stocks, forex, or cryptocurrencies, this will help you navigate your exciting journey of trading. Starting with step 1, before you do anything, educate yourself. Begin by learning the basics of stock market terminology, how stocks and options work, and different trading strategies. There are numerous online resources, courses, and books available for beginners. And look, you don't have to pay for anything. We have YouTube and Google. Now with the second step, you need to set clear goals. Determine your financial goals, risk tolerance, and how fast are you looking to get into trading? Are you looking for short-term gains or long-term wealth accumulation? The problem with everybody is everybody comes into this stock market game and expects to become a millionaire within the first 6 months or a year. And that's literally the biggest problem of trading, because when you have that mentality coming into trading, you kind of put the learning and the knowledge to the side and then look at the gains. Some people start off hot where the first week, first month, they're onto an amazing start. But after that month, it's a long downward hill from there. Now with step 3, we can start to do some actions. Open up a brokerage account. Choose a reputable online brokerage platform that suits your needs. Consider factors such as fees, user interface, customer support, and available research tools. Now, a lot of people like to start with Robinhood, and yes, it's a very easy interface, right? That's the first thing we were talking about, user interface. I understand why you're gonna go to Robinhood. Now, to start on Robinhood, I think is 100% fine, especially buying some shares, buying some long-term, buying some swing positions, that's fine. I know that, a lot of beginners who get into the market don't want to learn a new platform. They're already dealing with so much trying to learn trading, options, cryptocurrencies, forex, whatever the case may be. I get it. But after you take that initial step of at least starting, right? A lot of people can't even start. They say they're going to do something and they don't start. At least starting with a brokerage account, okay, fine, use a Robinhood account. But after that beginner step where you kind of get the ball moving and you're actually taking some baby steps, it's time to make that switch to at least Thinkorswim or Interactive Brokers if you're trading stocks or options. As far as Forex and cryptocurrency, I cannot recommend anything for you guys because I don't actually trade Forex or cryptocurrencies. Yes, I've held Bitcoin and Ethereum on Coinbase, but everybody knows a Coinbase, right? Now, after you make a brokerage account, the fourth step is practicing with simulated trading. Many brokerage platforms offer paper trading accounts where you can practice trading with virtual money. Do not start with your real money. This is a great way to familiarize yourself with the platform and test your strategies without risking real capital. Now, Robinhood, one of the negatives is I believe they don't have simulated trading. What I do like for simulated trading is Thinkorswim. Even if you don't want a Thinkorswim platform to trade on, you can use it for your simulated trades, even throughout your trading career. Just because you're an intermediate trader or you're 6 months in, doesn't mean you won't have to go back and try different strategies, try different executions. On Thinkorswim, you can go back to any date. I can go back to September of 2022, and I could trade the market that happened that day. Obviously, it's going to be a little off, options might not fill, all that good stuff, but it's always good to play with practice money, even if you have to write down where you would have got in and where you would have got out. Now, after you've played with fake or virtual money, it's time to develop a trading plan. And that's the fifth step. Define your trading strategy, include trading entry and exit points, position sizing, and risk management techniques. Stick to your plan and avoid making impulsive decisions based on emotions. Now, when I say things like this, people are going to look online and see that, for example, Nour, Joe, Alex made $6,000 today. Your impulsive decision is like, all right, I need to make more money. How can I, take a big trade? Should I go in same day contracts? Should I go into, I don't know, an earnings play, right? You're always going to look for a way to make more money, whatever the risk is, right? Whether, you're taking, a trade that's moving up 20-30% already and you're just hopping into that trade. No matter what, avoid making impulsive decisions. We call it fear of missing out, FOMO. And I believe some of you heard that because of the GameStop thing that happened and the AMC, short squeeze back in 2022, whatever year that was. That was a big year. That was a lot of FOMO. And then people that got stuck, right? People were buying, selling, making some profits, and they got stuck at the high of GameStop and AMC. And guess what? years later, they were not able to, get their capital back. And especially if they had options, it already expired worthless. Now, with the sixth step, you need to start small. That's with anything. Begin with a small account, a small amount of capital that you can afford to lose. As a beginner, focus on gaining experience and learning from your trades rather than try to make large profits right away. That's the biggest issue. We've talked about this. Traders want to come in as soon as they start, they want to make money. There's a reason why we had to go to school for different majors to become a doctor. People look at this online money, quote unquote, and say, all right, I can do this right away. How can I do this? They think it's a get rich quick scheme. You guys need to focus on people who actually talk about trading, talk about investing the right way. Look up people like Bill Ackman, Warren Buffett. People like this have actual history. They've been around for a very long time. Now, you can make some quick profits. The likelihood of you being around for a long time after you make those quick profits is very low. The seventh step is diversifying your portfolio. I'm going to explain it. It means a couple different things. First thing is spread your investments across different stocks and industries to reduce risk. We know that. Avoid putting all your capital into a single option or stock. Now, when I talk about diversification, you need to learn how to trade in different markets as well, right? Don't just learn how to trade breakouts. Don't learn how to just trade supply and demand zones, because markets change, right? As markets change, you need to stay excited. You need to stay knowledgeable. You need to understand that your trading plan that usually works during this type of market cycle isn't going to work during this market cycle. You also need to stay diversified in a way where the money you make from options or stocks or crypto or Forex, you need to be able to learn where to put that money when you have it. A lot of people say, well, I'll come up with that when I make money. That's not how things work. I plan things out 6 months to a year ahead, right? I say, okay, when I get to this, or when I have this, or when I do this, this is exactly what I'm going to do, and have a full step plan. So when the time comes, I don't have to spend time, coming up with what I'm going to do with that money or where I'm going to put that money, right? You want to stay up to date. You want to stay on track. You want to make sure that you're taking things step by step and planned out. Now, the eighth step is staying informed. Keep up to date with market news, economic events, and company earning reports that may impact your investments. Use this information to make informed trading decisions. Now, what does that exactly mean? Throughout the week, you have data coming out. You have the FOMC speaking. You have the Fed. You have Powell. You have earnings. All those things can move a stock. It can move the market. It can move the foreign exchange, whatever you're looking at, cryptocurrency. People need to pay attention. All of a sudden, people get into trading and it's just the charts. That's just the beginning. There are so much things behind those curtains that you guys don't know about. It takes time. Now, with earnings, with the schedule, with Powell speaking, those are all calendars. So for example, if I want to know what's going on with earnings, if my stock's reporting earnings, I would go on Earnings Whisperer. If I'm looking to find out what data is coming out for the week, whether it's for the stock market, for the oil, it doesn't matter. That's all online. And if you could have that schedule every single week, you should do it. Now, you can get this schedule. We post it in our Discord. It's 100% free. In StockHours, we post those charts every single Sunday. So let's just say you love trading Tesla. Tesla's reporting numbers on deliveries this week. You need to be wary that those numbers might be up or down. And if you have calls or puts, that's going to affect your stock. We need to worry about that because our options could go to zero, especially if we're playing, same week contracts. Now, the ninth step is monitoring your investments. Regularly review of your portfolio, adjust your positions as needed based on changes in the market conditions or your financial goals. Now, a lot of things need to be monitored, right? How you're trading, the execution, how much are you going in with, the risk. Those are all things that need to be monitored. And how do I monitor my trading? I have a journal. I actually have a lot of them. I run out of them a lot because I'm always writing down what I need to, improve on. Even if I have a green day, there's always things I could have done better. So that's the type of monitoring you need to be, because you don't have a boss anymore. This isn't a 9 to 5 where someone's going to come and look over you. All right, you're doing this wrong. You need to do this. Tomorrow you need to work hard. Tomorrow you need to wake up earlier. You don't have someone over your shoulder, so you're basically in control of all your actions, right? So all of the accountability is on you. The 10th and final step is continuously learning and adapting. The stock market is constantly evolving, so it's important to stay curious and open to learning new strategies and techniques. Take advantage of educational resources, seminars, and networking opportunities to improve your trading skills over time. Now remember, you don't have to pay for things. There's Google, there's YouTube, my Discord's free. I have a YouTube channel with extreme amount of knowledge and extreme amount of value. I also have a StockHours page where my interns, students, my whole team is always making educational videos for you guys. There's so much free content. So if you think you have to pay to learn, you have to pay for someone's course thousands and thousands of dollars, whatever the case may be. This is how people promote, all the influencers, all the gurus online. Things are free. Why do you need to go and do that? In my Discord, we host a lesson every single day. It's free. You can come and join us. We would love to have conversations with you. Like I said, our YouTube channel, Google, has so much value. I wish you guys the best of luck on your new trading journey. If you're watching this video, it sounds like you're getting started. And, keep me updated with your trading journey, and I'll be here to help you guys.